Hey guys, welcome back. As I told you before, as I mentioned in the previous video, the highest points. So now we're gonna talk about the swing highs and swing lows. It's important to understand, it's important to understand this terminology. So let's get into the charts. We have the same exact chart, yeah? And the point is, we can open it, yeah? The chart went here and went down a lot. So talking about the swing highs and swing lows, it's basically self-explanatory. I mean, you're finding the highest points and you're finding the lowest points at the bigger time frame, because now it's a 4 hour time frame, and yeah, we can try to find prices like this. We had the lowest price here on June 5th. It was 59k. See, and if you don't see the chart, you can see that at this particular moment we have our swing low. What does it mean? It means that below there is a lot of pressure, even in the high time frame. It's important to know that at this particular level there was a huge buying power. So this is called swing low or sell side liquidity, where the market sometimes goes, takes out, and make a huge movements after that. So now we had the swing low, the market was shifting and starting to go on the uptrend, but here was created a new highest point and also the swing high, so the highest point. And now what happened? The start shifted, the market shifted, we had a change of character, lower low, lower high starting to be forming. And what happened? The market decided that they want to take it out, that swing low. So basically it took them 2 weeks to do that, but the market went down. It taken out this swing low. And what we can expect? Yeah, we can try to apply some information from previous lessons. We're gonna try to look. For example, there is a big possibility to look. The swing low was taken, and what I'm telling you, you can try to look trades towards that for the swing lows or the swing highs, targeting for the take profit. After that, when the liquidity is taken, then the swing lows are taken, it's possible for the reversal, but you need to practice. So in this case scenario, yeah, we can expect the downtrend as we analyzed before, new lower low. But also, on the other hand, swing low was taken out, and we can expect that market gonna take the swing high. So in this particular situation, this is a live chart of the Bitcoin of the 4-hour time frame, we need to wait for the confirmation, because we had something, something we talked about. For example, this kind of the candle, this one, yeah, do you remember? It's buying pressure, so buyers get it into the market more and more. They don't want to let the Bitcoin went down more as it is right now, but you never know, because the sellers also, and the Bitcoin is dumping for a really long time right now, basically this whole year. But the market seeks those kind of the liquidities, the kind of swing lows or kind of swing highs. So there is a possibility that market is not gonna be forming new lower low, or maybe it's gonna be forming, but the future scenarios which is possible, yeah, the continuation, we're gonna form a new lower low, or we're gonna have something like that. The market gonna try to take out this swing high. So basically swing high and swing low, it's a high time frame. In this case 4 hours, it can be 4 hours, it can be 1 day, but the huge point where the reversal happened. What I mean by that, you see the swing lows and the market start bouncing up. When the swing highs and the market start going down. Now it's possible that the market gonna take it out those swing highs because there is a lot of future traders who had a short position there. So market maybe gonna take it out, maybe not. We need to wait for the confirmations. But if you are looking for the long position and you're gonna be, for example, as a swing trader, those kind of the things are important. For me, for example, I'm taking some scalps, which is what I'm gonna be teaching you in the academy. So join the waitlist, join now, and lock the price. And the day trading. On the day trading, yeah, those bias are important. Swing lows. Oh, so swing lows was taken out. Maybe I'm gonna try to look for the reversal, at least for that one particular day, because I'm a day trader. I'm not a swing trader. I don't like to hold positions for 2 weeks, a month. It's too much for me. Sometimes with the low, how to say that, with the low amount of money, yeah, I'm keeping them or just partially of my day trade if I can see that there is a swing trade possibility. But it's important to understand that at these points, you see the highest points and the lowest points in the particular moment, it's important because market seeks them. So that's basically the whole idea about it. So thank you guys for watching. I hope the swing lows and swing highs are kinda understandable, you know, the lowest point, the highest points, and the market seeks them to take out the future traders, to take out the high leverage traders, because there's the money who is in the air in the contracts. So understand those things. And the next lesson we're gonna talk about external and internal market structure. It sounds difficult, but it's not. It's basically all the same. Just we're gonna use the higher time frame for that, and you're gonna see why. And I'm gonna try to explain for it. So thank you for watching and see you in the next episode.